Joining us now is our mortgage guru, Clinton Wilkins, and we're going to talk about the fact that the Bank of Canada has hiked its key interest rate to 0.5%. Clinton Wilkins, we saw this coming now. We thought it might have been last month, but it's arrived, right?
It has arrived, Todd. There are some obviously positive outcomes of the rates being increased that Canadians are going to feel, and, there's going to be some negative impacts. We've been talking about rate increases for years. We've not seen the Bank of Canada increase the key overnight rate for 4 years. So I think some people thought it was never going up. Obviously, we don't live under a rock. We've been saying it's been going up, and it's been a lot of wait and see. But the economy really has been chugging along quite well in Canada. And as we know, inflation right now is quite high. So the key overnight rate is certainly a lever that the Bank of Canada can pull with its effort to reduce the inflation.
What's this mean for people with variable rates on not just mortgages but loans? A lot of people have variable loans. What's this mean for them? Obviously, more money. They're going to cost them more money, right?
It's going to cost them more money. So what's going to happen is if you're in a variable rate mortgage that has an adjustable payment, the majority of mortgages that are variable in Canada do have an adjustable payment. That means that your payment is going to go up. Before our show, Todd, I did a little bit of a calculation. In our office, our average mortgage amount is approximately $300,000, and I played with a 25-year amortization and a 25 basis point increase in a consumer's rate, and it increased their mortgage payment by $35 a month. So, if you're in a biweekly payment, you may see $17 a month change in your mortgage payment. So I think that's something to think about. We certainly sent out an email to all of our clients just letting them know that it's obviously the change happened. And many lenders will send out a payment change notification to borrowers that, their payment is changing.
So what's this mean? Put it in real numbers, I guess, if you will, for somebody with I don't know, can you tell, what type of increase? And obviously it depends on somebody's mortgage. But what kind of average increase would people be looking at here with this?
I think $300,000 is kind of the average mortgage, Todd. So I think we're talking about $35 a month if you have an adjustable payment.
Yeah. So it's not devastating. However, where might it end up, do you think?
I don't know. I don't have a crystal ball on where it will end up. And a lot of consumers are asking me if they're in a variable, should they convert into a fixed? We've been talking about this for a long time. In our opinion, you should stay the course. To lock it into a fixed rate today, you would take a fixed rate in excess of 3%, which in most cases would be double what the current variable rate would be for the consumer. So our feedback is stay the course. Historically, consumers do better in a variable rate product, Todd. And yes, you need to be able to weather the storm. If you're losing sleep at night over a 25 basis point increase and a $35 a month, increase in your mortgage payment,
you're in trouble.
Bigger problems. You honestly have bigger problems. And
I don't mean to laugh, but you're right.
Everything's going up.
Yeah.
I bought 3 packs of chicken breasts at the grocery store the other day, and I had a receipt from the previous week, and the chicken breasts per pack were up like $4.
Wow.
So, yes, I understand that $35 a month for some households is significant, but in the grand scheme, I think it's maybe a little bit of the least of our worries. For Russia, for example, their key overnight rate went up 20% last night.
Yeah.
So we had a very small increase, and yes, it will impact the end consumer. But the one positive thing that's going to happen, and this is what the Bank of Canada is hoping for, normally when they increase the key overnight rate, Canadians start saving money. Because on their saving vehicles, if that's like a GIC, a savings account, whatever, they're going to be getting a higher rate of return now. And typically, when the cost of borrowing goes up, consumers are spending less. The reason inflation is high is obviously because of some supply chain issues, but we've been at home for the last 2 years, Todd.
Yeah.
People actually weren't spending money. And now, since we're going out and about, we're spending more, we're buying more consumer goods, and that is what's increasing the inflation. So the Bank of Canada and some economists are actually projecting that the target rate for inflation, they're going to be at target by the end of the year. So I do not think the sky is falling. Do I think there's going to be more increases? Yes, I do. But I think if you're in a variable rate, it will still be cheaper than if you were to convert into a fixed. So our feedback overall, if you're in a variable, stay the course.
Thanks, Clinton. Always appreciate your advice. Talk soon.
Thanks, Todd. Have a great day.
You as well. Clinton Wilkins, our mortgage guru.